right. Hello, hello, hello. Thank you, Philip and Vanita and Jenny and Mark for chiming in there. Let me see if Jordan is on yet. So bear with me for a minute while we do that. Check here. Also, Mike, I'm going to make you an admin if I can find you. More folks are hopping on, so that's great. We appreciate that. Just grab Jordan here. All right. So Jordan hopefully will be on in just a minute here. And while we're waiting for Jordan, I'll take care of some housekeeping items. So number one, if you miss any of the session or you want a second look after we're done, it will be available immediately afterward on demand at the same link. I've set it up with the Zoom on demand replay function. So you can just go to whatever link it was that invited you here. We'll also get it added to the YouTube channel, Wake Up Real Estate, and it will be added to wakeup.realestate. We'll also add it as a podcast. We usually share these on our podcast channels over the weekend as audio only versions. We are going to talk about a number of different programs today, some of which are owner occupant specific, whether it's first time buyers or trading up, trading down, whatever it may be, and also fix and flip funding for investors. And what I also want to spend at least a little bit of time on is tying that into how, and Jordan, hold on, let me promote the panelist. Tying that into, okay, so we know these programs exist, but how can I, as a real estate agent, how can I use them to proactively create opportunities right now where we're still for most people, in a very low inventory environment. And yet we have rates coming down and projected to come down as the year progresses even more. And though there are some positive projections on inventory, we're still, not projected to get anywhere near where we were pre-pandemic. So with all that said, Jordan, thank you, sir. Welcome. We've got a great crowd here. This is intended to be interactive. So if you have questions, or if you're not sure about something, or if you have a scenario for yourself or for a potential client, etc., you can drop them in the webinar chat, or you can drop them in the Q&A box. We'll do our best to moderate both of those. David said, I'm still very low, even though the volume is all the way up. Can everybody else hear me okay?
Yeah, I can hear you fine.
Okay, good. Okay, so David, I'm sorry. If you're not able to resolve, hopefully the on-demand replay or the version of this that we'll add to the YouTube channel and wakeup.realestate, the audio will be better. I don't know. Sometimes there's goofy stuff that happens. So, okay, we have a number of different programs, products, and things of that nature. Isabel already have a great question. Isabel, don't let us forget about your question. I don't want to start there though, right? Because that's more of a scenario and in the weeds type of question, right? So I want to start with some big picture of the different types of renovation or rehab funding options. So Jordan, a follow-up to last week, which we were talking about FHA financing. FHA has a couple of products or programs that would allow an FHA borrower to make repairs to the property. So why don't we start with those two and just some basic information on those.
Yeah, or primary in general, primary residence in general, right? I like to break them up into really two categories.
Yep.
which is primary residences and then investment properties
Yep.
for the most part. And then even, I mean, you got commercial in there too, that's a possibility. But
Mhm.
the big one is usually FHA. FHA you can do a lot more with, more than the conventional version, which is called the home style. FHA is 203K is a pretty complicated loan for a lot of people. I don't know. I'm sure a lot of you have been on our calls before, but I actually specialized in when I got into the business. I asked my mentor, "What is the
Yep.
hardest loan you could do?" And I want to specialize in that. And that was the FHA 203K or just renovation loans in general. And I did a lot of them for many years, 6 or 7 a month for many, many years. And they're complicated, but with that being said, they're a great product. You can add structural foundation, if you're wanting to add an addition or you're wanting to remodel, update, just, general updates. But overall, the product itself is a product that will it's pretty robust in the terms of what you can do compared to other products, unless they're investment property, in the full rehabs. But you can essentially tear everything down to the foundation and rebuild it on an FHA 2 or 3K.
Are
Uh,
there limits on the amount of costs of renovation? What are some of the
there are
pieces
two
of that?
types of loans. Okay. In general, you have an FHA 2 or 3K limited is an actual product. Okay, and then you have the full blown FHA 2 or 3K. The limited is less than 30 grand. Technically, it's less than 33,000, but there's a 10% reserve requirement that needs to be kept. So your bid has to be less than 30 grand. It has to be more than 5 grand. Okay. There's a different type of loan
More than
for
5, less than 30 is limited. More than
yes.
5, less than 30.
And basically what a limited is, it doesn't require a HUD consultant. And what a HUD consultant is someone that's going to go out to the property and basically babysit the contractor is really what it comes down to, is make sure it meets FHA standards and it's done in a way that's, you know, keeps it compliant, right? Or more than anything, up to code. And that HUD consultant can make or break your deal. And it's happened before. I've had HUD consultants walk off projects. I've had contractors walk off projects before due to a bad HUD consultant. So navigating that, you're going to want someone with experience that's dealt with HUD consultants or contractors in that regard to make sure everything runs smoothly between the two, because you got the buyer, HUD consultant, and contractor all trying to do the same thing, but in their own way.
Yeah.
Okay. And it can sometimes cause a little bit of a rift. Now, with that being said, these are products that typically will go down to a 580 credit score. So it opens up to a lot of clients. A lot of banks will have overlays on these. So in the terms of a FHA 2 or 3K, I would say the norm is about a 620 credit score. Okay. But I always like to refer back to in our previous calls is 3 pillars, right? Or 3 pillars: income, assets, credit. The income requirements are the exact same. Okay. When you're basing your loan amount off of the approved project with whatever you're buying the house for, it's going to be based off the same debt to income ratios that it would be on a traditional FHA home loan. Credit score closer to 620. Okay. Assets is 3.5% down of the total job. Okay. It's not 3.5% down. So if you're buying a house for 100 grand, it's not 3,500. If you're buying a house for 100 grand and then you're putting 100 grand into it, right? It's going to be 3.5 off the total project. So it'd be about $7,000.
The total cost of the
Yeah,
purchase and the renovation. Purchase
correct.
and renovation.
Yeah, you have to have a 96.5% loan to value.
Yeah.
Okay. Uh, then you have the refinance aspect of it. Okay. Where there is no down payment or anything, you can actually refinance into 2 or 3Ks and remodel your houses, right? I know
Oh,
that's not super important for necessarily a whole, a realtor to know that. Where I bring up as a really important aspect is, let's say you have a house that you're trying to sell, right? You're trying to sell. It won't sell because it's outdated, whatever it is. And you're trying to, I don't know, there's a ton of equity into it and you want to get it real quick. I wouldn't necessarily recommend an FHA loan. But that is potentially, if they're wanting to sell in a year or however long, it is something to update that home to possibly get a better appraised value. Or maybe it doesn't, meet any, maybe it's really, really run down, right? There's some people that inherit houses that just don't, and they want to move into it, and it just doesn't, it's not going to fit them. Uh, but that's another option for, FHA.
Yep.
The next primary I would say is conventional. Okay. Conventional is a lot more lenient. Now, here's one of the things, and in the terms of what to do, like if you wanted to build, you can't build outdoor kitchens with an FHA loan. Let me put it that way. Luxury items. You can't build what's another luxury item?
A pool.
Pool. Can't build a pool specifically, but a home style conventional, you can build those luxury items. But on conventional home style, a HUD consultant is required on all loans. Doesn't matter the amount. Okay, you're gonna need a HUD consultant on it no matter what. Someone to come in and basically babysit that contractor. So I always like to talk about a little bit of what expectations I set when I have a homeowner wanting to do a renovation loan. It's really like, what do you say as the realtor, Josh? Let's say you have a client calling you and you say, and we're talking about doing a renovation home loan. There's some kind of baseline I set with them. It's kind of a expectation. Expectation number one, it's their sole responsibility to gather the bids and round up their contractor. I can't tell you how many times I've worked with realtors or lenders that want to do an FHA 203K or learn how to do FHA 203K, and I'm teaching them, and they try to round up these contractors and I've done it myself. I try to get a group of contractors and get them to understand our process. They don't a lot of times, and it's like pulling teeth to get their paperwork. You don't want, as a real estate agent, you don't want to step into that role to where you're the one driving that train, because it's going to be it's going to consume your entire time, right? When I say there's a lot of paperwork, these are hard loans. I'm not underestimating that at all, right? I'm saying it is something that is going to be required from someone to do. I put that on my buyers. If they want to do this type of loan, they gotta want to do it. And I also, a lot of times these lenders will not allow family, and everybody has to be licensed and insured. Okay. So a lot of people will come to me and say, the first thing they'll say is, hey, I have my dad that wants to do the renovation, for me. On a primary residence, FHA 203K, we can't do that. Okay. Family is typically not someone that I would allow to do it. Not that we couldn't, rules wise do it, but it usually ends up turning into something that it's not, where a homeowner is doing the work themselves, and it can totally blow up your transaction, right? There's, we want to kind of a clear separation from church and state. Let me put it that way.
Yeah.
And that is a product that is complicated enough. We don't want to add parents into the mix and fighting with a HUD consultant. And I have had it where someone had their parent at those HUD consultant consultations, and it turns into a big old argument. So with that being said, kind of the three, two main points that I make with homeowners is, number one is the contractors and the bids is their responsibility. Number two is we like to avoid family as much as we can. Okay. James, your uncle James, as an electrician, is not necessarily a bad thing. But if your dad's a general contractor and running the entire project, that might be something I would avoid.
So I want to pause here and highlight a couple of things. Number one, we talked a little bit about FHA. If you missed it last week, we did a deep dive on FHA, a whole bunch of ins and outs, myths versus reality, different ways that you can use that program. Jordan is an absolute wizard when it comes to FHA. So you should, if you missed that, you want to check that out. It's on our YouTube channel, Wake Up Real Estate, or wakeup.realestate is our website where you can go and find that. Or if you can't find it, just reach out to me. I'll get you that replay. That's number one. Number two, in there, Jordan mentioned refi as an option. And so I've got two QR codes here. The one over here, I think this is the right one. If you scan that, not right now, but if you scan that after we're done, there is an overview of our dual license program. So if that's something that is of interest to you, getting licensed as a mortgage pro and being able to earn referral fees and even potentially revenue share on that business that is probably already happening inside of your database, you should check that out. The other one over here is just our mortgage app, which you can check out if you want. Sorry, I missed it. Are the loans we're talking about good for California? They're anywhere.
Yeah, anywhere, all 50
Yeah,
states.
yeah.
They're the two that we talked about are Fannie Mae, Freddie Mac, and then FHA. So
Yeah.
it's just like a regular conventional loan and an FHA loan. We're just tying a little remodeling to it.
So we have FHA, 203K, limited and full. We have conventional home style. There all also are USDA and VA versions of renovation loans.
Mhm.
Okay. Um, Again, you need to be aware of the fact that these are not as smooth and easy as a traditional transaction. However, however, if you or when you adopt this as another way that you can play creative problem solver in your market, it means that when you're out with clients and they have what's that phrase, champagne taste on a Miller Lite
Yeah, beer
budget.
budget. Yeah.
Yeah. um when you find a property that they just absolutely love, but they can't get over, the carpet and the countertops and maybe the finishes in the one bathroom, right? If everything else checks the boxes and you've just been, not been able to find them something, you have a way to present that as an option. Like, listen, Mr. or Mrs. First time homebuyer, we can address those things for you. And even though the cost of virtually everything has gone up drastically since the pandemic, you can still get a lot done in that limited scope, that $30,000 or less. I mean, that really still can go a long way when we're not talking about luxury, finishings and things about things like that, right? A little bit trickier when you go the full scope, but for the right clientele and in the right situation, can be a great option for folks. Andrea, and I always forget if it's Andrea or Andrea. I always forget how you pronounce it, so I apologize. What happens with appraisals, and what if they over improve for the area, or is that even possible?
Appraisals is going to be based off bids, so it's just like a construction loan, right? If you're building a new construction house, right, in general, we don't have a house done before we do an appraisal to determine the value, right? We'd get specs and plans. We do the same thing when we're doing a remodel. We take the existing value of the home, the as-is value of the home, and then we give the appraiser the specs and plans, and then the appraiser will determine how much that value is. And hey, if they do it, I've had clients add additions and throw 100 grand onto their house, finish basements and do all kinds of things with their FHA 2 or 3Ks, and the value skyrocketed. I don't know necessarily about over improving the area.
Well, what
It's not going to.
I guess so another way to frame that question is: are there any protections, or what is there a scenario where they wouldn't it wouldn't be approved? Let's say, so like they're buying it for 200, they want to put 100,000 in renovations or 150,000 in renovations, whatever the case may be, and there's no homes that have sold in the neighborhood for 250 or more
Well,
than 250.
that's where
Like,
the
what are the
appraisal comes in. So the appraisal, they're not going to lend on anything with that the appraisal doesn't do. So go ahead.
So the appraisal would be after the repair. It would be you'd get a, and this is me being showing my
No, it would be
ignorance as far as
before the
how these
repair. The
works.
appraiser will be before the repairs even started.
Okay.
So
And then,
it takes the specs and plans, and then the as is, and the appraiser then appraises it. And then we clear everything through underwriting, finish, close, and then the repair. Once we close on the loan, that's when the repairs would start.
Yeah. Philip, can you mix and match VA, FHA, or conventional? Well, not for the same client, but we can do any of that. We have access to literally every program and product under the sun. With you know, we're with NEXA Mortgage, and you know, we have access to the largest variety of lenders, and the largest product and program suite, because we're not only number one in volume, also number one in units. So we have many relationships. I'm not sure if there was something more specific that you were asking there. Terrence says, is the FHA limited loan separate from the original loan for the property?
No, it's just the type of loan. That's it. So like FHA has a FHA, it's called a regular FHA home loan is called an FHA 203B. That's the program. Like if I went into the system, that's the program that would pop up for a traditional. So on an FHA limited 203K, that's what it's going to say. FHA 203K. Okay, limited. And so
But
that's the
their
particular program.
loan, it'll just be
It's
one
one
loan.
loan.
That's the end, the purchase price plus the renovations minus the at least 3.5%, the minimum 3.5%, right? They're going to have, they don't have two loans on the property. They have one loan, one mortgage on the property in the end. Bradley asked, can you go luxury items if over 30K? And maybe the way I was phrasing that was confusing, but if you're not doing the limited,
we'd go conventional on those. So depends on what you consider. Like luxury items are like outdoor kitchens, like for example. It's something that's
right. We could
irrelevant.
be using luxury in a way that's confusing, right? Like,
yeah,
you may consider a certain type of countertop to be luxury, but that
it's
might
not a luxury.
fall under any of these options.
Yeah,
depending on the cost.
So if it's something, yeah, it's not like they're gonna sit there and say, "Hey, you can't put a certain tile in that's really nice, right? Marble tile in." That's not what they mean by luxury.
Right.
What they mean by is like
you said, the outdoor
I don't know.
kitchen.
There's so many minutes. Yeah, there's so many.
The pool. What about here's one. What about fencing? Like, how would that be?
Yeah, you can do fencing. Yeah.
Okay.
You can do fencing.
Winifred asked, what if or what type of now this is great because this starts to transition. So let's summarize here. Owner occupant borrower. The main options, we've got FHA 203K, the limited and the full. We've got the home style, the conventional home style, and there are VA and USDA versions of these types of renovation loans as well. Okay, that's owner occupant borrower. But now we're going to transition into some other options or ways to think about this. Jordan kind of already hinted at one. You've got a property. You're trying to help the folks trade up or downsize or right size, but the home won't sell because of the condition. How can we unlock equity? Maybe they don't have the cash to make the renovations to make it Pinterest ready so it can sell faster or for top dollar, right? And so we've got many HELOC programs, okay, and products that could be an option for that. They could do a refi depending on the timing and so forth. And then we get into a great question by Winifred. What type of loan or how might someone build an ADU? Like how might they get the funding or financing for ADU?
Like when they purchase, like as a purchase.
Well, let's
back up. Let's back up because I think I can answer Raymond's question at the same time and kind of explain this a little bit.
Okay, perfect.
So,
and Raymond's question for those listening only is, can an FHA limited be in second position? Just for those that are audio only.
I am not going to just shove people in renovation loans, right? Because they'll get frustrated a lot of times, especially if we have other options, right? So like an FHA second position loan would mean that there's equity in the property and there's enough equity there that they could be in a second position, right? Typically, more than 20%, 20% there. So if we're doing something like that and putting a second position, we might as well just do a HELOC. Right, something very simple. Pull out a HELOC, something like that,
or even a closed-end second.
Yeah, closed-end second, something like that. So there's really not a demand for like an FHA to be in second lien position. They're not that it they would allow it, then make you pay off the whole thing.
Right.
But if you are trying to pull out equity to renovate a property, a HELOC or a second mortgage, closed in a second mortgage is probably going to be a better option. Okay.
Yeah.
An ADU or a mother-in-law's residence. Okay. Right.
What is it? Is it ADU is additional dwelling unit
Yeah.
or additional dwelling unit? So it's more common in certain parts of the country where,
California.
yeah, California is one in particular where they're adding a secondary uh, um, living, a smaller home, let's say, maybe a tiny house, something of that nature on the same property as a way to, increase available units, or it could be a mother-in-law suite, or it could be, for, I don't know, a son that just, son, daughter, whatever. Like there are any number of examples or uses from it. And it could just be as an additional income source. You could just rent it out again, depending on the township, regulations and so forth. Accessory dwelling unit. Thank you, Mel.
Yeah.
My brain's not working. Accessory dwelling unit. So Jordan, let's unpack that scenario then. What about, so if I own the property and I want to put on an ADU, I could look at tapping into the equity with a HELOC, with a closed end second, or I could just refi the entire thing. In fact, we have several folks that we're doing cash out FHA refis because they have equity and they're looking to make renovations or maybe add an ADU or any number of things that they may want to do. It could be simply to consolidate consumer debt because whatever may have happened. That would be one way. But are there products and programs where maybe I'm a realtor and I specialize in helping finding properties where an ADU can be added? And can we do that with a conventional
you can
home
do that with
style?
an
Can
FHA.
we do that
You
with
can do it with an FHA one. FHA 200K, you could. Because they allow you to
okay.
add structure.
Okay.
Structure. So they allow you to add additions and structure and so on and so forth, as long as it follows code. And I've had people do it in the past.
Yeah.
But there's other options for that. Like, let me make it, it all depends on our equity position. So when I say FHA 200K, typically we're not jumping at refinances. It is possible to do it on refinances. We're not jumping there because there's the option of cash out refinances,
Right.
which is a much simpler process. There's no one hovering over you guys to get the work done in a certain time frame. Or
if you want to take your life in your hands and have your father be the GC in that scenario, go right ahead.
Yeah, there's no paperwork to fill out, stuff like that.
Right.
So there's always more options to do renovation loans that outside of actual renovation loans.
Right.
But with that being said, if there are no other options, let's say you're purchasing a property, right, that doesn't have exactly what you need, you could get that bidded out. The downside to it, again, is it's just a longer process. It's not usually typically pretty smooth. You're looking at 60 days.
There's more red tape.
Yes.
Yeah, there's more red tape.
Yeah, but if you're buying it from, I've done this with like people buying from family members, friends, stuff like that. They'll do things like this to where they'll do a remodeling home loan, and it's a much smoother process because it's not on a sensitive time schedule a lot of times.
Yeah. We had a question. Can you help us with mortgage licensing and partnering, even with a different brokerage? Absolutely. It doesn't matter what. Well, the short answer is yes. As long as your brokerage, the brokerage you're at, allows it. Like their ICA allows for it. Just for example, for me, I'm with EXP Realty and with NEXA Mortgage, and I'm allowed to do that in both scenarios.
Can I expand on that just a little bit, just so they understand? So, just so you guys know, to the end of time, real estate companies have owned mortgage companies as well. Okay, so if you look at, some of them is, well, EXP has one. I know EXP specifically has one, but they don't care. But there's quite a few that you can actually find out which brokerages own a mortgage company. Almost all of them do, and so they'll have policies banning realtors from doing their own because they want everything to go to their brokerage a lot of times. Okay, so keep that in mind. Keep that in mind when you're whatever brokerage you're working with. I know Real allows it, but they also own a brokerage. A lender, but they do allow it. They if you do it a certain way.
And Elena, I'd be happy to chat with you. Just hit me up if you're curious and want more information. I can send you information on that. And if you scan that one, you can get an idea of how the revenue works and how you can add multiple mortgage-based revenue streams. Before we flip to more conversations about fix and flip, hard money, etc., I want to grab Isabel's question because I don't want to forget about this. Are there loans available for renovation style loans available for ITIN users? And if not, are there any options available for someone like that?
There is, because you have on investment properties, and we haven't really gone into this yet. We just talk when you're talking about primary and FHA, 2K, and Homestyle, those won't qualify for I-10, right? So when you're talking about investment properties, though, there are ways around it specifically. I don't know of an I-10 specific home loan for someone to buy as a primary residence. Now, when it comes to investment property, go ahead.
I think we might have one actually. Let me
Did Maria find one?
talk in generalities, but
Okay,
Isabel, I want to check on one specifically. If
we'll
that's what you're
double check
talking
that.
about,
Yeah, we'll double
the
check it.
primary
Maria,
residence.
yeah.
Yeah.
But what I've done in the past, I'll tell you what I've done in the past for I-10 borrowers. If it's an investment property, I've done it where an LLC purchases. You know, they have an LLC and we purchase an investment property, right? So you know, anybody that has really history of renovating properties, really those investors that are doing fix and flip loans that will do, will look at that history more than necessarily the buyer itself,
Yeah.
right? Do they have the ability?
You have a track record.
Yeah. What's your track
success.
record look like? And they will, you know, help, it'll be easier. It's easier with a good track record. I'll give you an example. On investment properties, we have 100 and 100, 0% down purchase and 100% of the rehab if they have a proven track record and do about 24 remodels a year. Okay. I have a couple lenders that would do that, and they'll just
Repeat that.
100 and 100. So when we talk about investors doing flips, so investors will talk about what do you offer? A 90-100, a 90-80. What do you offer? It's 90% of the purchase price, 80% of the renovation, right? Or 100% of the purchase
or 80,
price.
100.
Yeah, 80, 100. Oh, hey, you want 20, they want 20% down, but they'll fund 100% of the
Right.
renovation themselves. So as your experience expands and your portfolio expands, or these investors' portfolio expands, those terms get better over time.
Yeah.
So
we've got some great questions that I want to get to here, but I want to say one other thing on that front. If you have or yourself, you're looking at funding options for a fix and flip. You've got clients, you have one. The process that we use to get quotes for that is easier and different than applying. I always get confused because it's flipped. Then if you go our traditional application process, we just have some questions that we need information and some information about the deal, right? The project. So we'd be happy to if you have one of those scenarios, just reach out to me. I can give you the list of questions and we can get to shopping on your behalf or your client's behalf, like this afternoon, if you've got, one or tomorrow at the latest. Great questions though coming in. Great questions. What is the typical timeline and how do you approach a seller if the buyer is considering the 203K? So two parts of that question.
Is the question in here? What is the time?
It's in the Q&A. A couple of folks are using the Q&A versus the webinar chat.
Oh, okay. I just wanted to reread it. Are there products of... Am I missing the question? I don't know. Here, repeat the question.
It's
I can't find the
Bradley
question.
Petty. Okay, I'll say. So what is the typical timeline? We're talking about the 203K. And how do you approach a seller if the buyer is considering? The seller, it doesn't really matter for the seller.
It doesn't matter if it's seller. They're not going to know the difference. They want to know, know the difference. What they're going to know is the extended time frame for if you're asking for 60 days, they're going to want to know why, right?
Why would they need 60 days for settlement?
Um, you don't need 60 days. I'm just telling you that's what you're gonna
Well,
have.
I guess my point
Like
is what you're saying
it's
is
not
there's a little
it's
bit more
rounding
red
everybody
tape.
up to get everyone going. I would say, you know, if I'm setting the right expectations with my realtors, I don't like to set the wrong if Josh will tell you anything about me, it's me. I absolutely despise missing closings. Right. I hate it more than anything in the world. And I want to set the right expectations because I know how much it goes into moving a closing.
Yeah.
Okay. You know, for a client and for realtors, and how many people you have to call, how many things you have to move around. So to me, I take it very seriously on if I have to move a closing. And the last thing I want to do is say, hey, it's going to take 30 days to close on an FHA remodeling home loan, when in reality, it's probably going to be closer to 60. Rounding people up in the stages of how many times we submit paperwork or how many times we get in the contractor to redo a bid or revise something with the HUD consultant because the HUD consultant doesn't like what he's writing up. It just takes time, right? So typically it's 60 days. I would say if anyone
And
tells you
when
it's
you're
less than
saying the
60
60
days,
days, you're saying if I'm writing up a contract, I'm representing a buyer and we want to make an offer on a property, instead of a 30 or 40 or 45-day settlement window, you're if it's this type of financing, go for a larger window just to be safe and to make sure that
yeah,
we're
I
not
mean, you could,
having to
it's
reschedule.
really pushing it at 45. You're going to have to be on top of it and working with someone that really knows their stuff, right?
Yeah.
I'm going to tell you, a lot of originators do not know how to do these loans properly
Yep.
and they don't set the right expectations. And they don't hound the contractor the way they need to hound the contractor. The
Yep.
buyers don't.
Yep.
Could you do it in less? Yeah, absolutely. Yeah, it's possible. But the likelihood in my career and doing this for 11 years, 10 years ish, I would say is very, very, very slim. Okay.
Yeah.
So setting right expectations is 10 days, 10 days.
Okay. Lots more questions coming in. The one real quick, would you disclose to the seller? I think you want like the better, I think the better disclosure, the more the better. Like I wouldn't try and hide anything. You have to disclose that it's an FHA loan anyway, at least on
It's going to
the
say
Pennsylvania
FHA
agreement
2
of
or
sale.
3K on it. It's so they're
Yeah.
going to know. So in
Yeah.
a section where it's asked the
Yep.
proper, well, I guess not. Sometimes depends on your state, but
Yeah.
yeah, if you have it put in. So, but yeah, it's going to be FHA loan anyway. Ask for 60 days. Like, hey, they're doing a renovation loan.
Yeah.
You know, in this market, I think they're going to be harder to accept at times, right? Depending on your
Except
type.
for the fact that
Yeah.
even in this market, there are properties that are sitting because they
Yes.
either need the renovations, or they need the renovations and they started at a price that was as if the renovations were complete, and so they've been sitting because they started too high and now they're coming back down. So there maybe aren't a ton of those, but there are still those scenarios available in virtually every market. Um, are there any good ways to locate good HUD consultants? Is it tracked anywhere?
There's not a lot of them. Okay, unless you're in a big city, so you don't really have a choice on who you use a lot of times. Like for me, I'm in Wichita, Kansas. There's one. His name is Robert Frost. But there's a list. There's a list you can actually look up. HUD consultants. It's all public, available. Us as
Yeah.
your lender, we would help you find the right ones. But I would pull the guy. I would pull a guy from Kansas City, 2.5 hours away, to come and do my HUD consultants here in Wichita because I liked him better. It was worth the extra $100
Yeah.
on the trips, or $150 he was charging per trip. His name
Yeah.
was Lawrence. He was fantastic HUD consultant. And it's not really, there's not really a good way to figure out who's good in the area, who's not. You just got to talk to them.
It's trial and error.
Yeah,
Yeah.
it's kind of trial and error. And if once you've done a couple of these, so I know my area very well. It's been a few years. I don't know if Robert Frost is even in the business anymore, but I would say there are good ones out there. If you're in a bigger city, Brittany, there's usually not a shortage of them. There's plenty of them.
Are there loan products available for owner occupants with disabilities? For instance, wheelchair ramps, wider doorways, safety handles in bathrooms, et
Yeah,
cetera, et cetera.
FHA 2 case, all that stuff
Yeah.
is
Yeah.
that can all be included in those.
Yep.
So,
It
uh,
it wouldn't be specific to someone with disabilities. It's available to anyone for any reason that wouldn't be considered, luxury improvements. So yeah. For investors rehabbing loans, you have programs for mobile homes with land. So you're
Well, mobile homes. It depends on, is the mobile home on a permanent foundation? Number one, is it
yeah,
considered real
right.
proper? Number one. Number two is, what are we rehabbing? The mobile home would be my
Right.
question.
We can't rehab the land.
Yeah. So,
Yeah.
yeah, there's products out there. FHA, I think FHA would allow it. I have to double check on what.
Well, that would be, so he was asking for investors, but
Oh, and
there
for
are still
investors,
some. It wouldn't. We'd have
I
to
would
go
say
searching,
no.
but
I would say probably no. But I would have to go searching on that one.
yeah. Elena, the replay of this call will be available immediately after we're done at the same very link. We're also going to add it to the our YouTube channel, Wake Up Real Estate, and wakeup.real estate. So any number of 3 different ways. For starting investor, what is the best way to get 100 to 100 for a flip? Well, the best way would be you're going to have to find you're going to have to find the money to cover the difference, because it will be very unlikely as a starting investor to get 100. So you might need to look at, is there equity in a
I
primary residence that you can use? Is
Yeah.
there,
There's
go ahead.
different creative things that you can come up with the money without having to put money down, kind of robbing Peter to pay Paul. Now, with
Yeah.
that being said, and if I have an investor that's wanting to build up to being someone that does a lot of flips, okay. I was an avid investor for a very long time, built a pretty large portfolio. And the way I did that was by someone that mentored me in the mortgage industry. Okay. And someone mentored me. So I would talk to someone that you can sit down with and create a plan and say, okay, this is where I want to get to. This is how, I want to get there. This is my current situation. Tell me my path. And at that point, you'll have a path and a plan to get you there. And as
Yeah.
long as you do those things, you should be able to get to that 100. But it's based off experience a lot of time. So initially you're gonna have to figure that out, or
Yeah.
have someone that co-signs with you, someone
Yeah.
that has experience.
And we'd be happy to chat with you, Danny. We can even get you connected with Taylor on our team. He specializes in these kind of deals, and would be a great resource for you, and can help you strategize what we were just kind of brainstorming there for you. Goran, and I'm assuming this is specifically for investor fix and flip, any no doc options?
Any no doc options?
Yeah, I mean, you're going to have some kind of
On
documentation. I don't
renovation,
know exactly what.
no. Well, yeah, it depends on what we are categorizing as no doc, right? Are we categorizing no doc as no income? Like, what are we qualifying off of no income?
Right. Right.
They're going to have a credit score requirement almost at all banks. But
Yep.
investment properties, like these fix and flip loans for investor properties, they're not derived off income. They're based off the property. So
Exactly.
you're not uploading your tax returns or anything like that. You're uploading your portfolio, what you've done in the past. And even then, if you haven't done a lot, it's going to be assets and credit. It's not going to be, and then what the property is. What are you trying to do to the property? What's your bid? Is there room there? Do they think it makes sense? Is it a declining market? It's based off the property more than anything.
Yeah.
Now,
Yeah.
if you're doing a primary residence, there's not a no doc loan for that. Besides, if you're trying to do a cash out on a primary residence, we do have a no doc loan for that, but you have to have a 700 plus credit score, and the rate is not generous whatsoever.
Yeah.
It's pretty rough in the terms of what the interest rate is there.
Is it true that a HELOC can be up to 500,000? Yes, and even more. We have an automated HELOC where you can get up to 400,000 on a primary residence, and it's literally all online and automated. It's a soft credit pull. It takes like 2 or 3 minutes to apply. If you want to check that out, it's joshvips.com/HELOC, joshvips.com/HELOC. That's an automated online version, but we have manual HELOC options that are in excess of that. Now, you do have to have the equity, right? So it depends on how much equity you have. But we have one in particular that will go up to 95% CLTV on a primary residence. So there are definitely options. What states do you guys work with? So on the non-QM stuff, the investor, fix and flip, etc., we can work in virtually all 50 states. Not quite, but the vast majority of the states. On FHA, conventional, VA, USDA, Jordan, we're in 20 or 22-ish, something like that. And NEXA mortgage is in 48 out of 50. We're not licensed in New York or Massachusetts. There's just a lot of additional red tape, and it's just a big pain and a headache. We're working on it, but we don't have a timeline for either of those. But for non-QM products, we can, we can cover a lot more. And if we're not directly licensed in the state, we can potentially refer you to someone great at NEXA who could or can help.
New York, yeah, New York and Massachusetts are the only two. I saw that two
Yep.
people asked for New York and Massachusetts. We're in the process of getting licensed there. It takes years. Okay. So we've been in our process of getting our New York license for about 5 years.
Yeah.
So
It's crazy.
it should happen soon, hopefully.
Yeah.
Massachusetts, we put a pin in it until we get New York.
Yeah.
So yeah,
Here's I think this is specific to the FHA, but I think it would relate to any of the owner occupant borrower products. Can a buyer change the scope of the project after closing and request additional money from the lender?
Say that one more time.
So I think what they're asking is, and I'll make it more specific. They've got an FHA 203K.
Mm-hmm.
We've got a scope. But something has happened during the renovation process where we realize we need to change the project scope for one reason or another. Is that possible? And what's the process if it is?
Yeah, FHA, and we have to change the scope of the project after or before or after we close?
Well, after we've started the renovation.
Okay, so after you close. Yeah, there's stop gaps in there. We have a 10% on anything. Let's say you're doing $100,000 project and something comes up. Things can happen, guys. Like when you're pulling up carpet or you're pulling up wood or you're opening up a wall, and you get in there and you find things are a little worse than we think they are, right? There are contingencies in your loan that would pay for those things, right? Yeah. That goes straight back to the balance if you don't use them.
Yeah.
So keep that in mind. Right? There's a 10%. There would be $10,000 that we put away, typically on every FHA 2 or 3. If we're talking about FHA specifically, right? There's a $10,000 that you put away there, and there are a lot of HUD. There's HUD, inspector and consultant. I think so. I saw someone ask if a HUD inspector and consultant the same thing. Yeah, it's kind of a universal term. They just have to be approved by HUD to do these. So they inspect the property. They do the very best they can. Everyone does the very best they can, but it all gets fixed, right? There's contingencies here.
I have a commercial building. Can I get a loan like a HELOC on it? It wouldn't, not necessarily a HELOC, but if you own it free and clear, for example, and there's income from it, there are options for you to access that
money
equity. They might be a little non-traditional, but there are any number of ways that could be explored, Jenny, and I'd be happy to, if you reach out to either of us, we can chat. We would most likely get you connected with Taylor, who is more of our specialist on that kind of thing. Contingencies for sure. Do you suggest starting in your backyard for fix and flip? I would. If you've never done it, trying to manage one from afar is a recipe for disaster. That's just my personal opinion and experience. And I've, with both by myself and with partners, done, now this was all in the mid 2000s, well over 50 fix and flips. Some of them very profitably, some of them very much not profitably. So I cannot imagine trying to, now a moderate cosmetic, whatever, maybe. But if you've literally never had any experience with that, I would advise against it. Well, I'd like to learn from you guys. I'm licensed realtor in California. Well, absolutely. Reach out and let's chat. Let's connect and see. We'd love to learn more about what you're looking to do and how we can help. And I think that's someone interested on the fix and flip and exploring those kinds of opportunities. I think we've addressed all the questions. So let me sort of wrap up with it on a couple of different fronts here. I'll mention again the replay of this session will be available immediately on demand at the same Zoom link that led you here. I think, will also, if you registered, I think you'll also get an email as soon as that's available. Like, it takes a couple of minutes, and when they're longer like this, maybe up to an hour to render. We will also add it to our YouTube channel. Wake Up Real Estate is the name of the YouTube channel, Wake Up Real Estate. And it will also get added to the website, wakeup.realestate, or just reach out to Jordan or I, and we'll get you the replay. That's number one. Number two, if you have any specific scenarios or clients that might be interested in, whether it's owner occupant, FHA 203K, the conventional home style, VA, USDA, any of those scenarios, they can go to this where you scan this here, or you can call or text, or again, just shoot me an email, and we can get together on the best way or options that we may have for them. And then lastly, if you or you have investor clients that have funding needs for a fix and flip, and this is another way that we're working with a lot of clients right now who have equity in an investment property, a rental property, and we're using cash out DSCR loans, so for them to tap that equity to grow their portfolio. So any of those scenarios, we would love to chat. We can price and quote, rate, and terms and so forth. We just need some information, and we can get to work on those for you or your clients. And I made this slide, so I'd be remiss if I don't at least bring this up at the end, which is just an easy visual way for everyone to see our contact information, etc. Let me hold on here. Let me
Yes,
share my
Raymond, you
screen.
can. Raymond asked, "Can I get a HELOC on an investment property with equity?" Yes. So our 5-day HELOC is for investment properties as well. We even have closed-ended seconds that are DSCR, so there's no income.
Yep.
There's quite a few different ones.
If you want to see if the automated online HELOC, joshvips.com/HELOC, I will put that in the chat as well. It literally takes at most 5 minutes. It is a soft credit pull, so there's no downside, like there's literally no risk in at least seeing what offers and options are available for you, and you get an instant answer. Like, you either get approve, and here are the different offers and options available for you, or it's declined, here's why. And if you get a decline, it doesn't mean that we can't help you. It just means that one option, isn't going to work. We have lots of others. As Jordan mentioned, we have other HELOCs on investment properties, and we even have DSCR seconds. Not a ton. We don't have a lot of lenders that'll do that, but we have some. And that's all we need is somebody that we can maybe explore. My contact information, Jordan's contact information, is all on the screen there. I've also dropped it in the chat a few times for you. We are always available and willing and able to have a conversation, to explore scenarios, to see if we can help you, see if we can help your clients, maybe save a deal, create a deal, whatever the scenario may be. We're here to help, and we love connecting and networking and chatting with other real estate professionals. Some of you have already checked out the information on this QR code, wakeup.realestate/relo, on our dual license program. So you can check that out as well. Next week, I don't know what our topic's going to be. Jordan, you got an idea for our deep dive next week?
No.
Well, stay tuned.
We can ask them. You can ask them.
Yeah.
What do they want to learn about?
That's a great point. We've got a great crowd here still. let us know in the chat if you have a mortgage or financing related topic that you think would be great for us to cover in one of these deep dive sessions. And if you don't want to drop it in the chat, you can just email me directly, and we usually pick our topic later in the week for the following. And we want to create content and cover things that would be of the most help and support to all of you. So thanks so much for a great crowd today, a ton of great questions and interaction. Jordan, thank you for all the great information and your knowledge and wisdom. And I'm sure we'll
Absolutely.
chat with a whole bunch of you over the coming days and weeks. And we'll hopefully see you here next week, same time, 1 Eastern on Tuesday, for our next mortgage and financing deep dive session.
Okay. Sounds good. Appreciate it.
Thanks, buddy.